Okay, let's dive in. Welcome to the deep dive. Today we're digging into the latest Vantage Plus crypto outlook. It just came out yesterday, November 3rd, 2025. And the main headline really is this idea of a sideways price pattern with potential upside.
Hmm.
So the big question is, after that pretty significant move lower in October, what's actually keeping things stuck sideways right now?
Yeah, that's right. The report points out that, most tokens did bounce back a bit after the October dip, but then they just stalled. Both Bitcoin and Ethereum actually finished October, showing what we call a doji candlestick.
Yeah.
Which, for anyone listening, basically just means the opening and closing prices were almost the same. Pure market indecision, really.
Indecision, okay. And what's fueling that?
Well, the main pressure point seems to be the wider risk sentiment. Equities started looking a bit weaker, lots of profit-taking last week, apparently. That tends to spill over.
Right, that makes sense. It sounds kind of bearish overall, though. But the analysis also mentioned something interesting, that crypto seems to have this, internal strength despite that fading sentiment.
Exactly. That's the fascinating part. Despite the mood out there, the crypto market itself keeps seeing net inflows. And we're not just talking small amounts. I mean, the report specifically highlights the new Bitwise Solana Staking ETF. It pulled in, $55 million on its very first day last Tuesday.
Wow, 55 million on day one. Yeah, that's significant.
It really is. And that inflow, that new money, is where the potential upside part of the outlook comes from. The thinking is November historically can be positive, plus we've got earnings season ongoing.
Yeah.
Maybe that helps general risk appetite bounce back. And if it does, that internal crypto strength, those inflows, could well push the market up towards the end of the year.
Okay, so a bit of a tug of war between the macro mood and the crypto-specific flows. Let's get into the specifics then, the technical levels.
Right.
Bitcoin first, currently around $110,040 on the monthly chart. That a doji candle definitely put a dent in the uptrend, right?
It did, yeah. A bit of a warning sign. Vantage Plus is pretty clear. For Bitcoin to get its upward momentum back, it really needs to stay above $103,000. That's the key support level. 103K. Got it. So that's the floor.
That's the floor right now. If it breaks below that, well, the outlook could shift pretty quickly towards bearish. On the upside, the confirmation signal everyone's watching for is a solid break above $120,000. That would likely unlock the next leg up.
Okay, so Bitcoin's holding, maybe a bit nervously. What about Ethereum? Trading at $3,879. The weekly chart looked maybe a bit more positive. Those long wicks you mentioned.
Yeah, those wicks are definitely a good sign. It suggests that whenever the price tried to dip lower recently, buyers stepped right in. Good support there. But that support relies on the recent lows around $3,600 holding firm. If they break, not so good.
And the immediate target.
To really get going, ETH needs to push past the $3,900 zone. And the target becomes $4,000, that big psychological number. And if things really went south, the major support, the 50-week moving average, is currently way down at $3,332.
Okay, let's touch on XRP, around $2.50. The report mentioned a long sideways trend here. Is that just XRP being XRP, or is it tied to that broader profit-taking we talked about?
Well, it's probably a bit of both, reflecting the overall market gridlock. The analysis is sort of cautiously optimistic, though, because even the recent little price dip showed buyers were willing to come in. But yeah, it's stuck. Key support is $2.40. Needs to hold that. And to break out of this range, it needs a sustained move above its 50-day moving average, which is, 2.6548 pounds.
Right. Okay, last one, and this is the really interesting one. Solana, $185.02 right now. Trading in a tight range, $200 down to $180. But the report specifically calls it particularly vulnerable to losses. How does that square with the huge ETF inflow we just discussed? That $55 million seems like a contradiction.
It does seem like one, yeah. And that tension is probably the key takeaway here. While you have this positive institutional product bringing money in, the underlying price structure, according to the analysis, is still quite sensitive to that fading general risk sentiment. If the wider market takes a hit, tokens like Solana that have seen big recent inflows can sometimes be the first ones where people take profits. That new money can leave just as fast as it came in.
Ah, I see. So the vulnerability is about potential outflows if sentiment sours further.
Exactly. The report flags the key support zone, both psychological and technical, with a 50-week moving average right around $177.69. If SOL breaks below that level, then that vulnerability the report mentions could become very real very quickly.
So pulling it all together, it really does sound like a battle. You've got the external pressures like fading risk appetite, pushing down, and then the internal crypto market factors like those net inflows and key support levels managing to hold, pushing back up.
Precisely. The market's just waiting. waiting for a clearer signal, a catalyst. It's hovering near all these really important technical zones we've talked about. This kind of pause, it often means a bigger move is building. We just don't know which way yet.
Okay, so here's something for you, the listener, to really think about as you watch things unfold. We saw that huge success with the Solana Staking ETF, a big institutional nod. Yet, the analysis flags Solana itself as particularly vulnerable because of the macro picture. It really raises the question, right now, how much weight should you give to these flashy new institutional products versus the broader, maybe more fearful macro indicators? That's the tension likely defining the rest of Q4, something to mull over.